Welcome and thanks for joining us. My guest today is Jeff Bentley, the President and CEO of Northwest Federal Credit Union. Jeff, let's talk about interest rates for a minute here. Interest rates of tremendous concern these days, especially car loans, mortgages, other kinds of loans. Can credit unions ease some of those worries about interest rates?
Absolutely. The interest rate environment, we were super low forever. Seems like forever, almost
right.
A little over a decade, with the Federal Reserve keeping rates near zero. And then, of course, we had inflation pop up, and with the government stimulus, a lot of deposits came flowing in, and so people seemed to be flush with cash, and nobody cared about interest rates. And then everybody kind of got used to rates being super low on everything, mortgages, autos, et cetera.
Go back to the 80s, they were in the teens.
That's right. And so, in the 70s when the inflation was spiking and Paul Volcker, the Federal Reserve Chairman at the time, came in and he raised rates all the way to 20%. So it's all relative. I think my first mortgage was 8.5, and I thought that was a great rate. And at the time it probably was. So we've kind of unfortunately gone accustomed to really low, unusually low interest rates. And when the Fed started raising rates about a year ago, they have raised 475 basis points, so almost 5% over a year time span. That's the fastest rate increase that they've ever done. And so we're in really unusual times from an interest rate environment. And so it's kind of shocked everybody. And the intent from the Federal Reserve by raising those rates is to slow down the economy so that they have an impact, a negative impact on reducing inflation. And we've seen that. So in the summer, we peaked out about 9%, and today we're coming in closer to 5%. Their goal is to take it to 2%. They meet again in May, and so the consensus is they'll raise another quarter point. So I say all that to say, I think higher rates are here to stay for a while. And so we kind of got to get accustomed to that. And I referenced earlier in our conversation where credit unions are more focused on helping and less focused on profit. And because of that, because we don't have the same targets from a profitability perspective, we can take those profits or potential profits and put them back into our loan products, meaning that we can have lower auto rates, lower mortgage rates. We can also have higher savings rates and deposit rates. And so that's kind of one of the primary differences from a bank and a credit union as it is directly focused on interest rates. So loan rates are up relative to where they've been, but they're still reasonably low. And so if you're looking at financing or looking to get a newer used automobile, it's still easily done. I think you can get a 6%, 7% car loan. To your point earlier, there was a time when that was double digits, and so it can still be very affordable.
But prices for cars and homes have gone up too.
They have.
So the impact of even the small increase hurts a little bit more.
It does. And with the chip shortage here last year, there wasn't much inventory from an auto perspective,
right.
So it wasn't a lot to choose from, and the dealers were able to inflate those prices even more. We have seen where cars prices have started to come down, and that's new and used, and I think it's getting back closer to the norm. So if you've been holding off on getting a new vehicle or even a new used vehicle, it could be a great time to go get one and take advantage of the rates. We talked a little bit about where rates are going. Nobody has that crystal ball, but we know today it appears that they're going to keep going higher. So if you're waiting for rates to come back down, it's probably not going to happen anytime in the near term. So go ahead and pull the trigger.
Are lending requirements any different for a credit union than for a bank?
No, the requirements are really, from a regulatory perspective, are the same. We follow the same guidelines in the CFPB, which is the organization created out of Dodd-Frank, regulates that and also enforces a lot of those regulatory issues. And they're very aggressive on that front. But again, back to the difference between a bank and a credit union, because we're not profit focused, we can offer you probably a better deal. And and I'm sensitive to say, we've got great rates every day, or we beat people on rates. It's not always all about the rate. If you are the lowest rate in town forever, you're probably not going to be in business long, because there's a lot of people that have aggressive low rates for other reasons, and they may not be around, and this is the only way they can hope to keep the doors open. So be careful of who you do business with. We, again, like to help people, and a lot of the help is through education. And so we can educate you on, if you're looking for a vehicle, here are some of the things that you might want to consider. Just don't go to any car lot and, go to their finance office, and next thing you know, you've bought all these products and paid a much higher rate than maybe you could have if you had come to somebody that just wants to help you.
What are some of those things to consider?
Yeah, so I don't want to get too deep on, because we do a lot of business with auto dealers as well. So, and they make a living doing that stuff. But the warranties, gap insurance. So if you total your vehicle and you owe more on it than it's worth, the market value. If you don't have that gap, guaranteed auto protection, insurance in between, you could be on the hook for that difference. So they're very good products. Buying a warranty is always a good idea, especially if you're buying a used vehicle. But what you pay for that warranty and what you get for that warranty is very different depending on where you go. So again, education, shop around and make sure you understand what you're paying for and what the market is for those different products will be very helpful. We also will help you look at a variety of sources to find the best deal on a vehicle. So our rate may not be the absolute lowest in the market, but generally it's very competitive. But because you get these other attributes of the deal, then you'll end up with a lower payment and a better deal all the way around.
Is there an other things to look at category for mortgages also?
There is. So mortgage lending is very complex. There's a lot of organizations that will quote rates, and it'll be where you can buy down the rate, and they call it points in the industry. And so if you pay points, you can buy the rate down, and so it's as low as. What they don't tell you is you got to, upfront a lot of money to go into the deal.
Right.
Again, with our focus on helping people, we have 100% loan finance option. We have a 97% loan finance option with varying rates. We have a jumbo product. We have a 30-year fixed, a 15-year fixed. And so there's a lot of things that go into the deal that you want to make sure. The upfront fees, a lot of people charge you for processing. And so again, all those fees can add up. Even though you might get an 1/8 point better rate, in the long run, you're going to be paying a lot more because you ended up paying fees you didn't really need to.
Are refinance loans treated the same as new loans?
Yeah, we were in a huge refinance era the past few years because rates were so low.
Right.
And I think we got everybody. I don't think there's anybody refinancing now that rates have gone up. So that business has really cooled off. But we are still seeing housing purchases going on. So new finance deals are pretty prevalent out there. And especially in this market, we haven't seen housing take a hit like some of the other markets are starting to see. And it's usually those markets that really went up dramatically, like in Austin, Texas, for example. Now their prices have come down, whereas in this area we saw a gradual increase, and it's certainly expensive to live around here. We didn't get that huge run up like some of the other markets, and so we're still seeing the pricing hold pretty firm. And so if you're waiting for that market to turn, it may not turn. And if you're waiting for rates to come down, rates may not come down. So I would challenge you to kind of give it a little more thought. And if you find something you like, there's good reason to go ahead and pull the trigger and get that house.
At least some of the overbidding wars have eased off a little bit.
Hopefully, yeah.
Yes.
That's not good for anybody. I guess the seller perhaps, but everybody else not so much. So if you're searching for a financial institution that will solve your financial problems, challenges, stop searching. Go Northwest.
I want to thank today's guest, Jeff Bentley, the president and CEO of Northwest Federal Credit Union. I'm your moderator, Bruce Allen. For more on this discussion, visit WTOP.com and search Northwest Federal Credit Union.